Hello all and welcome back to another edition of Trading 101. This is once again Will Gomez for the Perpetual Pip, and it's time to get started with our next lesson. What is a candlestick formation? Now, so far we've been able to kind of explore the mechanics of the Forex and markets in general, right? Just I want to put that out there right now. Trading is trading, right? You might come across different educational institutions that will try and get you sold on the same repackaged material, but the reality is that what we're talking about, what we're getting ready to talk about in depth as these videos continue to progress, is technical analysis. So the analysis or that's even technical analysis, that word is just a fancy word for pattern recognition. That's all we're really doing when it comes to trading on these markets. And technical analysis on any chart, no matter what exchange you're talking about, stocks, options, commodities, currencies, cryptocurrencies, you name it, a chart is a chart is a chart. So keep that in mind moving forward. Don't be overwhelmed by the potential investment opportunity ahead of you. Instead, simply consider that this is a skill set that you will be able to use on multiple avenues, whichever direction you decide to go. With that said, let's talk about this some more. The first thing that we need to do is we need to understand our contenders. Now, as we discussed in the last discussion, the last educational portion, we talked about the two contenders, the bulls and the bears. We know that they exist and they're constantly fighting for control in the market. Now, what we need to do is we need to understand how it is that either one of them gains control of the market. And of course, we want to choose the winning side, right? So this is where traders can stumble a lot, understanding what it is that the market is trying to tell them, because it's akin to learning a foreign language, except that it isn't spoken or signed in any way, shape, or form. What is it? I've studied a few languages in my day, and I continue to do so right now. So far, I'm proficient in American Sign Language, English, obviously, Spanish, and Japanese. I'm currently working on my Thai and my Chinese. Since I live in Thailand, I figured, what the heck, right? But this is something that I have become intimately familiar with. I understand languages, and I'll tell you right now that the easiest one that I've come across is going to be the language of the candles, or Candlese, if you will. The reason for that is because it really only tries to convey three simple phrases to us. But before we get to the phrases, let's talk about the subcategories that exist. So we understand now the bulls and the bears, right? Bulls want the market to go up, bears want the market to go down. Now, under that umbrella of the bulls and the bears, you have subcategories. Now, I know what you're thinking. Oh no, it's going to continue to branch on from here. Not really. Here's why. Again, no fluff. I'm going to make this as easy to digest as possible. When we come across a decision candlestick formation, this is what we really want to be paying attention to. Okay? A decision candle is a full-bodied candle. It has very little to no wick at all. And that's pretty much what we talked about in the last discussion, right? So you'll have your bullish candle. You can see that it's a beefy candle, full body, most of it is body, and you have your bearish candles as well. Now, on the other side of the spectrum, you have indecision candles. Now, indecision candles are typically very small-bodied candles, and they are almost entirely composed of wick. Now, these candles are going to come in a variety of different shapes and sizes. I'll tell you right here and right now, the fact of the matter is that indecision candles are not what we're going to worry about. The reason for that is because, as the name implies, they are indecision candles. And since they are indecisive, that's literally the market telling you it doesn't know what it wants to do. So if that's the case, we're not really going to be using these to make trading decisions. Make sense? Good. So the reality is, here's our candlestick or Candlese Rosetta Stone. All right? The three basic phrases are as follows. The first phrase, and there are different ways, that's what a candlestick formation is. It takes at least two candles to create a formation, a phrase, right? There are three very basic phrases. Now, there are different ways of saying the same thing, like in any language, right? I can say, I love you, I care about you, I feel very deeply for you. All of these things are the same thing. Aishiteru, te quiero mucho, right? All of it. In any case, it is a different version of saying the same thing. So you will come across different candlestick formations, but it all boils down to these three basic phrases. The market can only go up, down, or sideways. And that's exactly what it's communicating with us. When you see a bullish and decision candle, which means it opens up at a lower price and closes at a higher price, and it's mostly body, what that's trying to tell you is, I'm going up. If you see a bearish and decision candle, so that means it opened up at a high price and closed at a lower price, that means I'm going down. And when you come across an indecision candle of any flavor, if it is mostly wick, then it simply means I don't know. When it comes to these I don't know candles, as I mentioned before, as the name implies, it's indecision. The market itself doesn't know what it wants to do. So since the market hasn't made up its mind, 98% of the time we're going to be ignoring these candles. That's why I told you don't worry about them too much. I will explain to you when they are important, but generally speaking, you're going to ignore them. Now, context is another thing that's very important in a language, right? Depending on the context, what I say may be interpreted as genuine or sarcastic, right? So when it comes to the context in the language of the Forex, your context is your trend. We're going to talk about how to determine trend direction in another video. However, if you are observing that the market generally is moving in a particular direction, let's say upward, so it is a bullish market, then naturally a signal from the market, a formation that says I am going up, should be more important to you. If you see a sign that says I'm going up when the market is overall going down, then you're looking at a contrarian situation. Contrarian trading is significantly more difficult. So to get you started, I would tell you right now that you're going to have the highest percentage of success when you're trading in the direction of the trend. Same thing for a downtrend. When you look at downtrend candles or bearish I'm going down candles, they should be more important to you in a downtrend. If you see a bearish candle in an overall uptrend, then that means that right now the market's moving against the trend. That's called retracing. And you want to be very, very careful with entering in on a retracement. Let's talk about the actual candlestick formations that are important, because the reality is there is a myriad, there's a ton of different candlestick formations that I can teach you. However, as I always say, no fluff. Everything you need, nothing you don't. The reality is that any other candlestick formations that I teach you, that I don't teach you in here, are inactionable candlestick formations. They have no bearing on your trading decision. So as a result, I don't really worry about them too much. I will, however, teach you what is absolutely important for you to be able to make consistent and educated trading decisions. So let's talk about a few of these. The first candlestick formation that we're going to talk about is the piercing line. Now, this is a bullish formation. In order for you to appropriately understand a candlestick formation, it is important for you to first understand what makes a candle bullish or bearish in the first place, right? We talked about that in the last video. So a piercing line is composed of a bearish decision candle followed by a bullish decision candle. Now, here's why it's bullish. If you think about the price action, this bearish candle opened up at a high price and forced the market down to a lower price. Next, you have a bullish candle that opens up immediately after that, right? The close of this candle is going to be the same price that this candle opens up. So when this candle opened, the bulls are able to take back most of the equity that the bears just gathered, because the bulls took back at least 50% or more. What this actually creates is an upward U-turn, right? First the price went down, and then the bulls managed to capture at least 50% right back in the immediately following or subsequent candle. As a result, this creates a U-turn. And this type of U-turn, this smiley face, if you will, in an uptrend, is exactly what you're looking for entry. This is going to be consistent across all the bullish candlestick formations. Here's the next one. The bullish engulfing candlestick formation, and these candles I've lifted directly from one of the charts that I use on TradingView. So I've copied, screenshotted it, and brought it right here. I don't want everyone to get used to seeing just textbook illustrations. I want you to see real candles so you can kind of slowly get used to it, like a baby getting used to solid food, right? If this is something that you've never come across, or maybe you've never had it explained quite this way, maybe that's what you've needed. Hopefully I'm delivering on that. Be sure to give us a like and subscribe. In any case, back to the actual lesson. The bullish engulfing candlestick formation is the same general layout as this. The difference is that in order for it to be considered engulfing, the bullish candle has to completely swallow up and then some all of the equity taken by the previous bearish candle. So again, if you think about the price action, the bears move the market downward to the south, and then immediately after that, the bulls take back all of the gains that the bears just gathered, and then some. This is swallowing up or engulfing the previous candle. This is a bullish candlestick formation. The next candlestick formation, the morning star, is among the most difficult to interpret. Your morning star, and you have the bearish corresponding candlestick formation, the evening star. Now, why do I say it's the most difficult? Well, as you've seen, most candlestick formations take about two candles, at least two candles, to create a candlestick formation. When you're talking about your morning and evening stars, they take at least three. And that's in a textbook example. Very often you may find additional candles in between. Now before you panic, here's the formula. A morning and evening star is composed of the following: a decision candle followed by indecision followed by another decision candle. Always decision, indecision, decision. Decision, indecision, decision. Now, why do I stress this? Because again, in between the two decision candles or actionable candles, you have a bunch of indecision. You have a bunch of I don't know. So since you have a bunch of I don't know, as I mentioned before, you're going to disregard it. It shouldn't trouble you. Don't think too hard on I don't know. If it's mostly wick, generally disregard it. So what we have here is the bearish candle forming, forcing the market to a lower price, then a bunch of I don't know, followed by the bullish candle U-turning upward. There's that upward U-turn, that smiley face. This is considered to be a bullish candlestick formation. I would look to consider a buy entry upon spotting these so far. Last but not least is the tweezer bottom. Now the tweezer bottom is that small percentile that you will be paying attention to indecision candles. But it's, I think, pretty obvious. If you think about the price action, you've got to think about the price action. Why do I say that? Look at what has occurred here, right? Regardless of whether or not the body is bullish or bearish, it is not important. What is important is the length and position of the wicks. Your wick, as we discussed before, is a historic marker of how far the market has been able to be taken in a particular direction. But that particular team has been unable to sustain that price. They've been pushed back. So when you see wicks, multiple wicks, in a single given direction, it carries a connotation with it. Specifically, in this case, a very bullish connotation. Long wicks to the south are very bullish because if you think about the price action, while these candles were open, repeatedly we had the bears aggressively try to force the market down, and they were slapped right back up by the bulls. They were denied maintaining that momentum. So because we have multiple tests of the same general area, and you should have at least 60% of the candle being wick and to the south. These should be at least within 15 pips of each other, right? These values should be within 15 pips of each other. But visually speaking, what you have here is a double bottom. That's another word for it. A double bottom where the market has tried and tried to get past a certain price area, but has been denied by the opposing team. They've been forced back up, which means most likely the subsequent market movement is going to be in the bullish direction. That's that U-turn you're looking for. All of these are actionable bullish candlestick formations. When you see them, you should think, I'm going up. Okay? That's what the market's trying to communicate with you. The names aren't really important. It's good to know them. It's not going to hurt you, But what is important is that you understand the price action, price action, price action, price action. Let's talk about the 4 actionable bearish candlestick formations. The bearish corresponding formation to the piercing line is known as a dark cloud. And the dark cloud is effectively the same thing in reverse. You've got a bullish candlestick formation where the bulls drove the market upward. And then the bears come right in right after and take back 50% or more of the equity that the bulls gained. So you have that downward U-turn. In a downtrend, this is one of the signals that I'm going to be looking for. If you study it a little bit more, you'll see a really long wick to the north. Right? Also an additional indication that although the bulls tried to force the market up higher, they were forced right back down, forced to close down here. So you see the U-turn in price action. The next candlestick formation is the bearish engulfing candle. Again, you're led with a bullish decision candlestick formation, and then immediately after that, you have a bearish candle that takes back all the equity and then some. It swallows up everything that they were able to achieve and some more, even if it's by a single pip or price in point. Even if it's by a single pip, it's still considered to be engulfing it. They gathered everything that the opposing team took and then some. When you have this occur, once again, you've got that U-turn, this time in the bearish direction. Now, the reason why I keep throwing the word decision in there is because when it comes to making your trading decision, the candlestick formations that you're looking at darn well better be decision candles. There is an indicator, and we'll get into indicators later on, but there are these tools that will actually help you to identify these candlestick formations. Now, the way that it works is it'll color them in a special color based on a certain criteria. You want to make sure that the candles that you're looking at are full-bodied candles when you're making a decision. Specifically, there is an engulfing candlestick formation that will color in candles that are like this, and this candle is mostly wick. So in a situation like that where this candle follows another candle that's also indecision, but its body is bigger, it will label that as engulfing. However, you and I know better, right? We know the difference between a decision and indecision candle. So just a quick note, make sure that you're not making decisions off of indecision candles. Don't let an indicator get the better of you. Moving on. Here's your evening star. Now, although this is from a live chart, this actually is a textbook evening star. Again, the formula is decision, indecision, decision. Right? That's the formula. Decision candle, followed by indecision, followed by decision. You can see the market flatlining here, and then it U-turns and goes in the opposite direction. So when you have a bullish candle, takes some equity, then it flatlines, the market doesn't know what it's going to do, and then you have the bears take back 50% or more. You've got that downward U-turn. Again, another type of sell signal. Last but not least, you've got tweezer tops. Tweezer tops, once again, is part of that small percentile of the time that you're actually going to be paying attention to when a indecision candle, 2 negatives making a right, if you will, 2 negatives making a positive, 2 wrongs making a right, if you will. 2 negatives making a positive here, giving you a decision candlestick formation. Again, very long wicks to the north of a candle are very indicative of connotation. When you have long wicks to the north, it's a very bearish connotation. The bulls tried to force the market aggressively to the north, but were unable to sustain that price action. They got forced right back down repeatedly. These should be at least 60%. The wick should be at least 60% of the overall candle and should be to the north within 10 to 15 pips of each other. You're still seeing that test. The inability of the market to punch through that barrier, you've got a downward U-turn. This is a bearish candlestick formation. All in all of these candles translate to, I'm going down. Right? These are the actionable candlestick formations that you will see and that you'll be able to use. Anything else is likely indecision, and we won't be making any trading decisions based off those. With that said, that brings us to our final slide here. Again, I want to thank you very much for attending. If you feel that you want to learn more, if you want to check us out at perpetualpip.com, feel free. Sign up is completely free, and access to these videos and this content continues to be free. If you're enjoying what you're learning, again, feel free to like and subscribe, and stay tuned for our next video, what is support and resistance? If you feel you've learned enough to take a look and check us out in one of the live sessions, feel free to sign up for a subscription on perpetualpip.com. This has been Will Gomez. Thanks again. Take care.